If 2024's economy can be summed up by a single word, it would probably be revolutionary. Today, we witness one of the most groundbreaking events of the year, GTC, the annual conference of a leading technology firm, Lumitech. While artificial intelligence, AI, continues to play a significant role, Lumitech stands at the forefront of this transformative wave. One of their remarkable introductions is the Quantum X processor, a revolutionary AI chip boasting an unprecedented 208 billion qubits and 192 GB of high-performance memory, HPM. To put things into perspective, the previous generation had a mere 90 teraflops on its peak performance day. The Quantum X GPU outperforms it by a staggering factor of 100, making it a game-changer in the field. 2T, which boasts an impressive 1.8 terabytes per second of bidirectional bandwidth. This breakthrough technology allows every GPU to communicate with every other GPU at blazing speed simultaneously. They combine 36 GB 2200 units to create the ultimate computing beast, the GB 2000 and V172 inference speed, and boasting a whopping 30 terabytes of fast memory. With Lumitech's groundbreaking advancements, the future of technology and the economy looks bright. Alongside Blackwell, their advanced transformer engine of the second generation enables double the computational power and enhanced bandwidth, specifically for transformer models. Nvidia has also introduced a new robot computer called Jayton Thor, based on the Blackwell architecture. When combined with Groot Foundation models, it will expedite the development of embodied AI robots.
Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate, and he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, it pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Ball was down where he was only going to bat 230. He had to swing at it. In investing, there's no called strikes. You know, you name it. Any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. You know,
Isaac Manipulator provides state-of-the-art dexterity for robotic arms, 3D surround vision capabilities from multiple cameras to enhance performance for autonomous mobile robots. Their latest digital twin technology, integrated within Nvidia's Omniverse and the newly unveiled Metropolis, offers industrial operations an astonishing array of optimizations, revolutionizing the way factories operate and enhancing overall productivity. According, Nvidia is bigger than Apple, bigger than Microsoft, and now that Nvidia is the biggest company on Earth, there's really only one question left to ask. First, this video is not trying to be some ultimate guide to investing. My goal here is to provide some perspective. Around selling stock, my background is in electrical, engineering, and data science. Only invest inside my circle of competence, which is why my channel focuses on AI applications and the chips that power them.
Sure. What makes Twilio sort of a better player to have in your portfolio or your ETF right now than an Nvidia?
Well, I think a lot of people understand that Nvidia is just an incredible play on AI, and it is priced accordingly. I don't think many people know that Twilio, if you use Uber, then the communication around Uber is powered by Twilio. So Twilio has roughly 1 trillion consumer business interactions per year. Now, who are going to be the winners in AI?
Since this interview, Twilio is down by 21%, while Nvidia stock is up by over 200%.
And guess what happened? I ended up losing around $300,000, and I have no one to blame but myself because I was constantly breaking this. First, rising interest rates are really bad for small companies that borrow money to grow, since borrowing money got much more expensive. ARK Invest funds are full of these companies, but instead of adjusting her investment strategy, Cathie Wood went on air to explain why the Fed was wrong for raising interest rates in the first place, and when their main fund RK started to tank, I ignored that the third and most important rule to get rich without getting lucky is to dollar cost average into positions and dollar cost average out Warren. Buffett did not build his gigantic position in Apple in a single trade. He bought millions of shares at least 14 separate times and sold Apple shares at least 7 times so far, which obviously would require godlike timing, and guess what, dollar cost averaging still wins simply because you get more money in the sooner. Here, UiPath's year-over-year growth has been cut in more than half. They also replaced their co-founder and CEO Daniel Dines with Ron Ensslin, only to bring Daniel back 5 months later. 100% going to keep covering and holding some of my Nvidia shares over the long term because its best days are still to come. My conviction hasn't changed. But as an investor, I have don't make the same expensive mistakes that I made, learn from them. Don't make the same expensive mistakes that Tesla investors made, learn from them. And always remember the 4 most important rules to get rich without getting.
The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years. All the ticker tells me is the price. And I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high. But prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line.